Happy Friday, everyone. Welcome to the Wall Street Blockchain Alliance's Crypto Roundup. Today is Friday, October 3rd, 2025. Ron Quaranta here with my amazing friend and co-host, David Brill. Joshua Clayman cannot join us, I think, today, David. We will figure out. Maybe she'll join us a bit later on. For everyone on LinkedIn and X that's watching us, YouTube as well, thank you so much. Before we begin our usual disclaimers, obviously, please keep in mind nothing discussed is investment or legal advice, and really what David and I talk about are our own personal opinions, not necessarily the opinions of our respective firms. David, autumn is nigh and truly here. It was a cool 45 degrees when I woke up here in central New Jersey, in the central New Jersey compound. It's October. David, what's been going on?
Well, Ron, it's nice and 90 degrees down here in South Florida, but we are feeling the warmth of October on our portfolios, and a lot of people in a very bullish mood.
Yeah. You know, it's interesting, David, we talked a lot about where prices are going, and September seems to have this seasonality for crypto that, I've seen for many years, which is sort of depressed prices. There's a lot of news going on macroeconomically as well. I mean, we might as well hit on the government shutdown, which means, we'll talk about it in more detail, but some delays from a regulatory perspective, as well as delays in the data that's gone out there. David, how much do we correlate some of the crypto price action? I mean, I'm looking at BTC in the past week, up over 12%. Yeah. How much of that is correlated to anticipated good economic news? How much of that is hedge, I wonder?
I think it's also repositioning, Ron. I think that you have some repositioning here in the fourth quarter, and some people, look, they may be moving from securities into crypto. Look, gold has had a big run. Maybe some people are taking profits in gold and are moving into crypto. Yeah. And I think also, we've created, not you and I, but we've created this whole October thing, and this fourth quarter has been the best performing quarter for crypto assets. So, you create something, you talk about it long enough, you sort of manifest it into being, and we see it play out.
It becomes a self-fulfilling prophecy. I'm going to add one thing to that, David. And for everyone in the audience, if you've got questions for David or I, please put them in the chat. We'd love to address them. David, I wonder how much of this is also you and I and the crystal ball. And I'm just going to say it because we've been talking about wirehouses for the past 4 or 5 years. We're beginning to really see what I call this kind of upswell, almost quietly. But, Vanguard, I believe, may allow crypto ETFs. And if Vanguard's mentioning that publicly, there are dozens of other firms that are beginning to place themselves for that conversation with customers. And that meets demand for these customers. Do you agree with that? And do you see that escalating?
Absolutely. I've had meetings with a very large investment bank that is looking to see what products can they offer and almost correlate a risk factor to what products can they offer and where does it fall on the risk curve for the bank. Yeah. Because they're very aware that Robinhood, Schwab, and Morgan Stanley is going to leverage E-Trade, that these online arms of certain, their competitors, or they are online competitors, are taking market share. And I think that they realize that offering these ETFs are, of minimal risk to them. I don't know how profitable it will be for certain wirehouses, but it's very clear that they want to see what suite of services that they can offer that will pacify people who won't go elsewhere, but also won't put them at a large amount of risk.
David, it's a really good point. By the way, for the audience, we just got the message from WSBA Central. Josh will be joining us, slightly delayed. David, it also makes me ask a question. You and I have Josh have discussed this many, many times. I wonder how much of this is the generational shift as well. And again, it hasn't been 100 years. It just feels that way since you and I started talking about crypto as part of portfolios, for example. Hey, Josh, how are you?
Great. How are you?
I'm good. Thank you. But David, to that point, I wonder how much of the dialogue is some of the economic news that we've been seeing. In other words, money moving to younger generations, that kind of generational shift from boomers to X and from X to the follow-on generation. How much of this is placement for the wirehouses, placement for the brokerage firms around what future customers will need?
Yeah, look, future customers are going to want access. They're going to want it quickly. They're not going to want choices restrained. And if they don't like the choices they're given, they're not going to have that same loyalty to banks or wirehouses as their parents did.
Hmm.
I think this younger crowd isn't the golf with their financial advisor crowd. Not that I'm saying that everyone in our 20s were like that, but there were some remnants of that. If our parents had relationships with financial advisors, they typically, it went down generations, and then you grew up on that person, and then that's somebody I want to do business with. Now I think people are much more empowered. There's not this information asymmetry that there used to be.
Yeah.
And there's a lot of choices, and people want to invest in things that they believe in or think are meaningful going forward. And crypto and AI for two are things I think that resonate with a younger audience.
Yeah, David, for the record, I suspect you and I were buying stocks on our own around 14, whether or not Mike knew it. Josh, welcome to the conversation. It's good to see you. We know you're super, super busy. Wanted to just talk to you a little bit about some of the things we're seeing in the market. October is here. Prices. What are you seeing in the marketplace? And Emma Channing insists that I leave the words risk on or risk off only to you. So I will leave that to you.
Well, I think what we're seeing is October indeed, at least for right now. So whether that means risk on or what, yeah, I think I will leave that to you guys to to decide. But the numbers right now, yeah, I think I was pretty surprised I hadn't looked at the market in a while, meaning a few days. And then I looked and suddenly Bitcoin was at 120. So
Yep.
it was
For the
pretty.
audience, that means Josh has stopped looking at the texts from David and I with the latest price points. David, it brings me to the next question, which the three of us have to talk about. And I had seen some recent articles, and you've been saying it for a while. Where is alt season?
That is
You knew I was going there.
That is the $100 trillion question. So traditionally, in the past, we've seen Bitcoin run up first, then Ethereum run up, and then all the altcoins sort of followed, and the money or the value would move from Bitcoin to Ether, then to the altcoins. It's a little different now with the ETFs, where some of the money is stickier, and people aren't going to be selling their ETFs to buy. We don't necessarily have the ETFs yet for some of the altcoins. But I think as people get more confident, as Bitcoin is like pushing up against an all-time high right now, actually today, we're up to 123. And we see Ether, I think maybe when Ether breaks an all-time high, and there's a comfort level that we're really sort of in this bull phase, and another part of the bull phase, then money will start flowing to alts. And we did have one big day where some of the alts that I track were up 20% or 10%. But I think once we see sort of confirmation that it's not a head fake and that we're really, moving past these all-time highs, I think then we'll see some more liquidity go into the altcoins.
Josh, you might have noticed every time David mentions prices, I end up pivoting and looking at my terminal here to check the prices because we simply can't keep up. Josh, go ahead.
So I was going to say definitely not what I would think you guys would call altcoin season, but what I've been seeing is when I sporadically look at the prices for a certain number of tokens that I just sort of look at, periodically. I keep seeing like up 5%, down 5%, up 5%, down, or like up 5.9%. But again, it's not that sort of breakout of like up 20% and holding or something like that. It seems to be cycling through the same 5 to 5.9% up and down.
Yeah.
At least with the smattering of tokens that I've got.
And Josh, you have inadvertently given us a talking point, which is trading ranges. So you've been seeing these tokens, in a channel. And even Bitcoin was in a channel for quite a while between like 110 and 120. And so it's bouncing between these channels. So what we want to see for any of them, if you're bullish on the market, is for the prices to break through the channels, so have a daily close above those channels and a weekly close above those channels. And then that's considered more bullish. But yes, I think you're right. They're still sort of trading in the ranges, but now on the higher end of the ranges.
Yep. And I'll add to David's channel education for you and I, Josh. The other thing to look at when we look at resistance and support levels, where are the volumes against those resistance and support levels? To David's point, moving higher and breaking resistance on higher volume indicates kind of generating additional strength to buy into a market, which is a very bullish sign. I'm going to add one more thing to this, David and Josh, and I'd love your opinions. The three of us have been in this space for feels like 3 or 4 lifetimes at this point. And Josh, you brought up 5% up, 5% down on Bitcoin. The three of us remember 15% up, 15% down days easily. This tells me, David or Josh, correct me if you disagree, there's enough liquidity and institutional interest that volatility is beginning to smooth over a longer time horizon. David, do you see it that way?
I see it that way, and I also see it that there's enough volume being traded so that in those times, on those weekends, on those holidays, American holidays in particular, when there was less volume out there, things moved considerably. Like, I think we used to joke around about if there was a holiday like a couple of years ago, like beware, because you could see like 20% moves. I think you and I used to talk about, Ron, I think you used to listen. I don't know how much you'd pay attention to us when we were talking about it. Josh would be like, put an order in like 18 or 20% below the market, because there's a chance on one of these wonky weekends that you'll get hit. I mean, so I think there's much less of that now, but it still occurs.
Josh, you and I remember David mentioning certain things, and markets would move 20% at a time. So David, we love you. I'm just glad that volatility is smooth out, has been a bit smoother lately. Josh, we mentioned a bit earlier, before you came on, we talked about the shutdown, which obviously has a human toll, and we won't get into the politics of that. But certainly there's an economic challenge as well. We've talked about, we won't see some of the economic data that David and I and you chew on every Friday, but some of the regulatory work has ground to a halt as well, Josh. And I wanted to start to really look at the conversation around the kind of wave of exchange traded products for crypto that are waiting. Josh, can you remind the audience what was the rule change that was reviewed by the SEC for ETPs, and how long do you think that'll be on hold?
In terms of how long things will be on hold, I think some of this has to do, obviously, as you just noted, with the government shutdown. What the SEC did approve were generic listing standards for the ETFs, for the crypto spot ETFs, meaning that every time that there is a new crypto product, like crypto ETF, the exchanges don't need now to apply to the SEC for permission to get a rule change, because part of the reason for the rule change requirement, and this is apart from like the S1 and things of the issuer file, right, is just that there were no generic listing standards that crypto spot ETFs would fit into. So every time you had to request that. And that was one of the sticking points back before the Grayscale case, right, against the SEC, which sort of got things finally in motion. But the objection used to be from the SEC, well, there's insufficient market surveillance, all these other reasons why not to grant the rule change. So now we have listing standards, generic listing standards, so that presumably, if you fit within those, it'll be more streamlined of a process. By the way, when I was abroad in the past couple of weeks, I was speaking with someone who had taken a view, actually a couple of people had the view that they thought that within 6 weeks from, I guess, last week or so, that we would see staking in the ETFs be permitted. So I guess we'll see how that works out, especially given the government shutdown. But what's also interesting, and this is a little bit separate from the ETFs, in speaking with friends who work for government agencies, certain of them, including, for example, certain folks at the CFTC, they may have separate funding, right? And some of them, at least as of the end of last week, were expecting to be still working no matter what. So it's interesting how even within agencies, some work may continue. Yeah.
David, weigh in on that, and Josh, you and I've seen the conversations. You and I were both overseas last week. It was an interesting series of the kind of international perspectives on what's happening in the U.S. There's an additional wrinkle to some of this, Josh, that I want to throw out there and get your perspectives on. Clarity, the SEC recently put forward as well on custody. When we look at some of the things around state trust companies, David, do you want to weigh in on why that might be important? Again, some folks would look at that and say, well, the SEC is letting it be the Wild West again. David, I'd argue it's the exact opposite. They're enabling crypto to operate within the guardrails that financial markets participants operate in. David, Josh, do you agree with that?
So I'll talk about the states in two levels. One is, I do think trust companies, state trust companies, should be able to be qualified custodians when it comes to crypto. They, have a higher standard than just money transmission licensing companies. And, to be, you have to, for certain bond offerings, to be a trustee, you have to sort of have a certain amount of liquidity. So I am for that generally. There's obviously exceptions in each case. But I do think the custodian issue, as we've spoken about broadly, we need more qualified players. We have such a concentration of custody in a couple of players that I have very strong comfort with. This is not a criticism at all, but with the amount of value at stake, we do need more qualified custodians out there. So I do think this is a helpful move.
Yeah. Josh, you agree?
I agree 100%. And I think, I think in my analysis of the various state chartered custodians, some of them have, obviously there are differences between and among them, but, I've done pretty in-depth analyses for various parties on the crypto custodians and kind of kick the tires, including for insolvency remoteness and other sorts of questions, depending upon the proposed type of deal being structured or contemplated. And I think that many of them have pretty robust, robust considerations in place. And I do think that, I think expanding the ability, expanding the universe, I think David said correctly, of qualified custodians is very helpful, especially because some of these custodians have been focusing on digital asset custody for a very long time, right? As opposed to someone just pivoting into this. And also, frankly, with respect to certain banks, I've seen contemplation of providing custody services, but sometimes that has just been, for example, literally sub-custodial relationships with one of the usual suspects that are custodians. So when we think about I know one of the things that we talked about when SAB 121 still was a thing was, okay, well, banks would seem to be the natural qualified custodians, right? But actually, these state chartered entities have a lot of experience with this. So.
Right. Josh, to that point, David, you brought up something interesting. And Josh, you referenced SAB 121 being rescinded by Staff Accounting Bulletin 122. I would have anticipated custodians, I think that happened in January, Josh, correct me if I'm wrong, custodians climbing over themselves to, cater to the crypto industry. It's still a relatively concentrated group, David. I guess the business question becomes why?
Well, look, I think it takes time. I think, look, we have a new administration and there's a lot of positive momentum we have, but I think when you're a regulated entity, you don't just jump and do something. It's all very methodical and thoughtful, and a lot of conversations are had. Ideally, some of the larger ones have had those conversations and are in the process of moving forward. But I think we have to remember they're not small startups. I actually worked for two trust companies, one in the crypto space and one in traditional finance. And, there's a lot of, governance that you have to do. There's a lot of updating of business plans that you have to do. There's a lot of those regulatory hurdles that you have to jump through. Like perhaps, the board needs to meet and say like, okay, now that the rule has changed, are we prepared to go and do this kind of work? And if it is, then the business plan has to be updated depending on what the existing business plan is.
Yeah.
So in fairness, Ron, I think there's a lot of, we'll call it governance, compliance,
Yeah.
slash, making sure you're on board with your regulator before you can sort of pivot into it.
And all of that before you can sell to potential customers.
Yeah. And then, also if you're in a business, and I'm sure Josh has dealt with this a lot, if you have a business that's used to custodying fiat, it's different than custodying crypto. Beyond the security part. And there's a whole host of issues.
You mean the mechanics of it and the operational?
I mean the operational and mechanics. Where the money comes from is much easier. If you've been, custodying money or fiat for all these years, than crypto. There's a lot of elements to it that, I think are new to larger institutions. And so the operations part of it takes time too, and you want to get that right. Last thing you want to do is go into a new space and have your regulator, slap you on the wrist for not following procedures they want you to follow.
Yeah. David, Josh, good point. I think it's an opportunity for us to pivot. I'm going to do it. Josh, David, you and I were joking in the virtual green room a bit, and there's not a week that goes by, I'm just going to say it, where someone doesn't email me or text me and says, I am starting a DATCO on Crappy Coin, and Ron would love to get you involved. Josh, I'm going to ask it. I probably asked it last week. It's all a blur. Are we at peak digital asset treasury company levels, or is there more to run?
I think there's more to run. I mean, Ron, I think just the uptick since the government shutdown in Bitcoin, ETH, Solana, those types of things. Listen to me. I think this is going to pique the interest of more and more, right? Because not everyone who's getting into the digital asset treasury business is deep in crypto, right? Some people are like, hey, I have a shell. I've got this company that's not doing anything. I see these, this movement. Would you like it? So I think that's what we have to remember. It's not just all people who've been waiting and waiting for this moment. Some of it is when they see the rapid acceleration or increase, that's going to draw more people kind of chasing the yield.
Right. But to that point though, David, and Josh, I appreciate that commentary. I agree with you. As more liquidity comes in, as more of these are launching, doesn't that compress the premium over price over the underlying? You're on mute, buddy.
As you can see, my dog Amber in the background, this is really scintillating stuff we're talking about for her. But for the rest of us where it is, I think it's a combination, Ron. As you see different DATCOs for different tokens, for each token up to a certain level, there's probably a uniqueness to it, and there's an interest in it.
Yeah.
Again, I think the pricing of these DATCOs is typically they come out, the shares have done pretty well, and then they sell off pretty dramatically to NAV or somewhere around NAV.
Yeah.
So I just think for regular investors, it's hard to sort of, price and value them at first. Because if you don't even know if they put the assets to work to buy the crypto, the underlying.
Yeah.
So I think just everyone, look, I'm supportive of different structures in our business, but I think people for these structures really just need to look closely at them and understand where they are in their sort of corporate life cycle.
David, it also, go ahead, Josh. Sorry.
Oh, I agree with David. I think though, one of the things that as I project this out in my mind, wow, I keep getting blurry. Maybe I'll go closer to the computer so that doesn't happen anymore. Although you may be like, go back, get blurry, please. A couple of things. One is just when I think about the really, the whales of the world, right?
Yeah.
Who do they have as counterparties, right? If they ever want to exit, right, or if they want to do some profit taking without moving the market, what do they do? I kind of have a question about what happens with these digital asset treasury companies if their goal is buy and hold, right, forever and never sell. at some point, yes, like I realize that that drives potentially scarcity and drives the price up. But
Mhm.
then once there's no more Bitcoin available, for example, what happens, right? Is it like everyone is super like I don't know, does it all collapse or does it all like what happens from
I'm,
there because
It's a funny
I'm going to
question.
weigh in with my opinion on that, Josh, because
Yeah.
that's something the three of us have been talking a lot about, and I'd love your perspective and David, your perspective. I won't talk about Bitcoin in the year 2140. Let's just imagine the current market run. David, I think at some point it becomes a matter of what's the use case for that underlying token. Because when we start looking at, you can make an argument about Bitcoin as an inflation hedge or as a payments rail. You can make an argument about ETH or Solana as the new financial markets infrastructure layer, for example. So Josh, to your point, that's why I look at something that's a DATCO with crappy coin and think it's probably got a limited long-term span. You could look at a DATCO for some of the more prominent cryptos and think that might be around for the long haul. David, what's your thought?
So it really comes down to something Josh was talking about at the beginning or for a little while. If you have different options, which option are you going to choose for owning a specific crypto? So if there's a DATCO, and I'm just going to use Solana, I'm not picking it out for any other reason than it's one of the larger ones. If you're going to choose Solana, do I buy Solana on a centralized exchange like Coinbase or Kraken? Do I buy a Solana DATCO that maybe owns the Solana and runs validators and stakes it? Or do I own an ETF that might either own it in its spot form or maybe owns it and stakes it? So I think there are going to be different iterations of what you want to buy and where you want to hold it.
Yep.
And I think that ultimately is the most interesting case. I think the pure buy and hold DATCOs would be, putting strategy aside, maybe less interesting when there's an ETF for those underlyings.
So, Josh, you and I know David well enough to know that he's probably already gone through the complex arbitrage strategies between DATCOs and specific crypto ETFs. David, I'm looking forward to the thesis at a future episode.
Maybe I'll spill some at our WSBA annual symposium.
Yes, October 23rd. Go ahead, Josh.
I think also one thing that I've heard discussed just in general is like, okay, these DATCOs have a fundraising premium. And when that goes away, like, what do you do? So this idea of maybe having like an OpCo, an operating company in there of some sort, and maybe having like complementary companies, almost like a roll up, right? And then having treasury, right? So it's like a DATCO, but with an engine.
Right.
So
Can you merge your way into something like that, Josh? Or are you talking about operating companies organically growing within those organizations?
I mean, I think there's a number of different ways that you could do it. Like if you, I mean, you could have a company go public, right? And then, so like merging that way, like into a public vehicle. And then you could purchase digital, like there's lots of different ways you could formulate this. But I do think, while I have heard of certain DATCOs investing in the strategies of other DATCOs and, things like that, to me, that seems like a potential. I mean, it could be great, or it could be a race to the bottom, because it, ultimately, just like when you, in 2021, like we've talked about, like if you're rehypothecating an asset, and you ultimately have one asset, or if you think about 2007 and like, okay, well, C-rated mortgages, and you blend them together, and all of a sudden it's A. So
right.
I think, I do think having some kind of an engine in there that can continue to, I don't know, that can attract more users,
Josh,
something like that.
Yeah, Josh, by that logic, and I'm with you, strategy then is essentially first among equals, not just in how much BTC it holds, for example. And again, I'm digressing a little bit away from treasury companies, but it has a business that generates revenue. David, do you kind of agree with that hypothesis?
Yeah, look, not only for strategy, but if I haven't been clear, like the DACOs that I think will be successful will be staking. They could have a lending business if done properly. Lending out the crypto or the DACO. So they're getting money. If the underlying appreciates, and then getting money by lending it out. Now it needs to be done very carefully and thoughtfully, and thinking about what the LTV should be, and if there are covenants for these lending agreements, like it really has to be thought out. But that's where they could have multiple streams of income that make them more interesting.
David, you're talking about a crypto version of something you and I have seen and Josh have seen for a long time, which is stock lending and stock borrowing.
Yeah.
But for the crypto world, which is a multi-trillion-dollar global business, arguably.
Yeah. Look, there's no reason. Like the reason why we failed in lending in the past was that we had entities that weren't as sophisticated as they needed to be. We had entities that ended up, having criminality related to them. Or we had entities where they wanted to lend, but they hadn't perfected what the lending model would be. And when the market seized up, they weren't able to handle that when it seized up. Right. So I think that the lessons learned for all of that should be that we can create lending models that work, that maybe they're a little more conservative than we'd like them to be, but that could be a business alongside a DACO that's holding, a large market value token.
Yep.
And Josh, I see a lot from Greg in the comments.
Oh, I missed the comments. I'm sorry. Oh my goodness.
Yeah.
We got giggles from Emma, which is always good.
Which we appreciate.
Yes, absolutely. Greg, sorry. Strategy of a DACO on buy and hold versus buy stake trade is part of the analysis. Absolutely agree. I think Greg is hitting all the points, Josh, that you and David had mentioned. I want to go off script a little bit. And David, I don't know if we even talked about it in the virtual green room. Avoiding the politics of everything. The CFTC does not have a new chair.
Yeah.
I wonder, it makes me ask the question, which is, does it matter from the market?
Well, look, we want our major agencies to have chairs. We want them to function as they should. I was reading an article on CoinDesk, and Chris Giancarlo said, that they are looking, and the White House is vetting a number of names, including Mike Seelig, who's currently at the SEC, I believe. So I do think we want someone in place, and the sooner the better, but it has to be the right candidate. So it looks like for whatever reason, Brian Quintenz's name is now out. I've read a whole bunch of things about it, but I'll just leave it up to others, to decide why that is. Yeah. But it is important that we get somebody in that seat.
Well,
Josh, go ahead.
So I have a question.
Yeah.
Do you guys have why couldn't it just be Caroline Pham? I mean, she's doing the work, right? She's doing it.
Yeah. I don't think that she's sort of, again, I don't know her personally. So all that I've read hasn't seen a scenario where she's raised her hand and said, I want to do this. It always seems like the articles are talking about her as outgoing. Now that could just be the way it's being reported, but no, she's certainly been there long enough. I think she could be, considered.
And she's very knowledgeable about the space. I mean, Josh, to that point, and I hate to raise the word, it's the politics of appointments like that. And she may be even smarter than any of us think in wanting to avoid the politics of all of it. So shout out to Caroline Pham. But yeah, it's a good question, Josh.
Yeah, I mean, I see her in lots of places, and in person and virtually, and she's doing the work. You know what I mean? She's so.
Yeah. Including her joint work with the SEC. And
yes, exactly.
Task force.
The DMAC, Digital Assets Subcommittee that she started, and all these sorts of things. So, I mean, you're right. Maybe there's some reason why she doesn't want to, but it's just so interesting to me that we have someone who is actually doing the thing.
Yeah,
and
absolutely.
We're still looking for a different person. But I think also the talk about, Paul Atkins and whether he would lead both agencies is very, very interesting.
We had this conversation at one of our working group meetings. I think it was legal, Josh, and I kept getting messages from a dear friend, Adam Goldberg, and it was along the lines of the Senate Agriculture Committee will never, ever, ever allow those two committees, those two regulators to operate as one. So it'll be interesting to see where that goes. Josh, David, we're running up on time. I wanted to share, David, I'm going to give you the nerdiest of my data points.
Oh boy.
We're going macroeconomic, and both of you, as well as so many of our friends in the audience, have witnessed me talk about these data points, like used cars that are relatively new sitting in driveways as an economic indicator. David, are you ready for it?
I am ready.
Corrugated and solid fiber box orders.
Down considerably.
They are not down considerably, believe it or not. They're not down as much as you'd anticipate. And I'll dig into the data. Anyone who's interested, Greg Murphy could probably look this up faster than I could. St. Louis Fed and the Fred portal has data. My point being, I think we're going to have a really good 2026, David. I'm not asking for any predictions, and we don't make any sort of investment advice. I think some of the underlying data that we see means potentially continued lower interest rates, which is kind of an up signal for crypto and the regular markets.
Well, guys, for corrugated boxes, is that like moving boxes? I'm just trying to figure out like what that is and why is that an important indicator?
Like the boxes that Amazon ships.
Got it.
Like the boxes that Walmart and Wayfair, all of those fall under that category. They are not. I'll double check the data. I'm sure someone will fact check me rather. But those are some of the common indicators some people look like for to build the thesis of their future forecast for the economy.
By the way, guys, so I read an article. I have it up in front of me, and you may have covered some of this before I joined, as I was wrapping up something. But it is from this. It's from a Binance website. I thought it was an interesting analysis. It's just under Binance News, and it says why crypto market is up after shutdown. And it says traders identify 4 main drivers behind the crypto market rebound after the U.S. government shutdown. Number 1 was safe haven demand. It says gold surged to $3,922 per ounce, while U.S. 10-year yields declined, signaling investors are moving capital into alternative stores of value like Bitcoin and Solana. By the way, not investment advice. Then item 2 was ETF inflows, and it gave some numbers about that. Then the next one was short squeeze, and it said 574 million in crypto liquidations over 24 hours, with 430 million from shorts amplified the rally across certain coins. And then the fourth, October, right? Historical October rally. So I guess, do you guys agree that those are the drivers? I don't know whether you think that there's something else. I guess the question is, why, after our government shuts down, did it go up? Just at a very basic level. Is it those things, or is there something more?
I'm going to throw out 2 things. I think it is those things, Josh, but I also think, the market is kind of a bit of a prediction engine in many regards. I think a lot of players, David, don't suspect that the government shutdown will last very long.
Yeah. Look, and I think the data points are things actually we did talk about in the early portion of our, of our episode here. But look, people look on a quarterly basis, and where things are and where things are trending. And gold is having an amazing run, and some people are moving money from gold into crypto. There may be some people who don't have exposure to either who are moving it to both.
Yeah.
So it doesn't really surprise me. And I think my look on the economy, I think we've talked about this, that I think that the sort of mainstream media has been kind of dire about the economy and that we're doing poorly. Meanwhile, I think more of the people on the economist side or people who look at markets see a very different picture.
Yeah.
So I think as we keep on getting data points that support a sort of better economy picture, it reinforces the view that we're in a more prosperous environment.
Josh,
I'll say that with one caveat, though.
Yep.
I do think that there is a growing chasm between people who make over 100K or 75K and less. And I do think that people making less are still having a hard time. Maybe less of a hard time, but they're still struggling.
Yep. Josh, you opened the Pandora's box and allowed David and I to go down this road. So I'm going to add a couple of things to that. David, let's use the word that everyone's been using since January, the tariff word.
Yeah.
And for a long, long time, people in, let's call it popular media, have been saying tariffs are going to bite into, consumers. It's going to be really bad. Tariffs coming. I'm going to say it, David. I think that the markets have entirely, at this point, now that we're not going to discounted the impact of tariffs. And I think they did it for two reasons. I think companies were better able to absorb the cost increases and not pass them on to customers because of process efficiencies, including things like AI.
Mm. So I think you're right. I totally agree that there's sort of a sharing of the tariffs between, the sellers, the producers. So I think it's not hitting the consumer, all at once, or they're only seeing a certain percent of it. I also think that there's certain tariffs. I think we're on luxury goods where people are paying them, like watches. Like I have a friend who's a really experienced watch dealer. There's like a 39% tariff on Swiss watches.
Yeah.
And now what he's seeing happening is like the sellers are paying for some of it and the buyers are paying for some of it. So I think it's sort of being, like you said, Ron, taken in parts.
Yep.
I mean, I think that also there was sort of a worst case scenario, like you also said, Ron, about where things are, what would happen, and it just hasn't manifested that way.
Yep. And David, I think I read that the administration is lowering or eliminating the tariffs on fine Scottish whiskey, so you can begin to add to your collection again.
Well, I front ran that and bought a bunch poorly.
The wax of Lagavulin he's got in the compound.
But I genuinely think that there was uncertainty, and the market doesn't like uncertainty, and I think it's just played out differently than a lot of the media was presenting it to be.
Yeah, agreed. David, Josh, we're just about out of time. One last plug. I'm going to say it. Shout out to Emma. Shout out to Greg. Shout out to all of our colleagues that watched in New York City, October 23rd. You can join Josh. You can join David. You can join me. You can join a whole bunch of others in person at the WSBA Crypto and Blockchain Summit. If you have not registered, please do. It'd be great to see you. If you have any questions, drop us an email, info@wsba.co. Josh, you know what I'm doing this weekend? Making sure that the pigs in the blanket stay on the menu for the cocktail reception on October 23rd. How about you, Josh?
I think for me, I'll be running around with kids and catching up on some work. Yeah.
That's harder work. David?
I think we may be seeing a new high in Bitcoin over the weekend, or if not the weekend, Monday, because we're getting really close to it right now.
We're bumping up against 124. David.
Yeah.
Now.
I also will be enjoying fall in Florida, which means college football, barbecue, and my daughter goes to the #2 school in the country now for football. Hoping Miami beats FSU this weekend. It's a big interstate game, so go Canes.
And Amber will be our honorary mascot for the Crypto Roundup.
Yes.
That's okay, David.
And I think the last thing, Ron, is that we all will be speaking on Tuesday. Why don't you tell the audience about that?
We are. It's our friends and partners at the AICPA are holding our annual blockchain symposium in New York City. I managed to convince David and Josh and several other WSBA members to join us and share their expertise and thought leadership. It's a curated event. It's really for that profession, but hearing what Josh has to say, hearing what David has to say, and so many other colleagues is invaluable. So we're happy to give a little follow-up report at the next roundup. David, Josh, we'll leave it there. Have a great weekend, everyone. Thank you for joining us. Take care.